You've probably seen a lot of Forex traders on the internet flexing and living a very crazy lifestyle, and you're probably intrigued on how this works. Well, at one point in time, 9 years exactly, I was in the same position as you. I saw some people on Instagram living a pretty crazy life, and I wanted that same exact thing. But one thing that I skipped out on realizing is a lot of these people, one, took a lot of time to become that person, but two, they had to have a complete shift in their mindset and the way that they think on an everyday basis. Success is doing what's hard, day after day, no matter how you feel, if you feel like doing it or don't feel like doing it. So before we start, are you willing to push yourself to new levels to see a different type of lifestyle that you have never seen in your life? If you answered yes, you're in the right place. I'm going to show you in the next 30 to 60 minutes how you can start trading as a complete beginner and make your first $10,000 in the next 90 days. If you're looking for somebody that can mentor you one-on-one, I do offer one-on-one mentorship, but I have 5 spots open this month. All you have to do is click the link in the description and we can book a call and talk to each other and get to know each other a little bit better. Now, without further ado, let's get into my computer and let's make some money. Step 1, we are going to go to tradingview.com. Now, tradingview.com is where we're going to analyze the markets, and we're basically going to see whether we want to buy or sell a specific currency pair. So after you go here and create an account, you're going to go to this watch list button right here, and you're going to want to go to the plus sign where it says Forex and add a couple of these pairs to your watch list: Euro USD, GBP USD, and USD JPY. I already have my watch list, so we're going to go to Euro USD right here. We're going to click this button to make the chart larger, and now we can see that we have a chart right in front of us. So TradingView is actually where we're going to analyze the markets and figure out whether it's going to be a good buy or a sell. Now let's go over our mobile app, MetaTrader 4. I want you guys to go to your app store and type in META Trader 4. Then you're going to get the one that says MetaTrader 4. After you download and open it, you're going to create an account. You can go to new account. And what you could do is just open a demo account. If you're brand new, that'll be fine at this point in time. We'll go over how to open up a live account in just a little bit. After you do that, you'll see on the quotes page we have our currency pairs. If there's not a currency pair that you're trying to trade from TradingView, you could just push the plus sign and then search it, and you'll press this little green circle with the plus sign in it to add a pair, and you can see it's on the quotes page. Then if I want to go to the charts, I could go here. If I want to look at a pair on my quotes page, the actual chart, you could just go to it, click it, and go to chart. And then if I want to execute a trade, let's say I'm looking at GBP JPY, which we're on right now, I'll go to trade, click buy or sell, and enter my lot size, whatever lot size I am going to be using. This is just a little preview on what MT4 looks like. We're going to now go back into my computer and we'll go over some more important information. Now, you guys need a broker, and a broker acts as a bank account when it comes to trading. We're going to sign up with a broker like Owanda.com or Forex.com. You guys are basically going to enter some information like your name, your email, where you're from, all that good information. So Owanda is where you're going to do it. And the cool thing about Owanda is it is regulated. This is a regulated broker. There are a lot of unregulated brokers, and if you guys are looking for a Forex broker to trade with, make sure that you go on Google and you type in, is whatever the Forex broker's name is, a regulated broker. And the difference between a regulated broker, that means they're in jurisdiction with the country that they're in. So Owanda's in the US, I'm pretty sure, and they are basically regulated with the National Futures Association. They're regulated with the SEC. There's not any problems with you and your money. Like, they're not going to try and run off with your money. Versus unregulated brokers, they can basically say, screw you, your money's no longer in your account. They can blacklist you and take your money. So you need to be with regulated brokers. The leverage is smaller, which they don't give us as much breathing room to take as big of a trades, but it is regulated and your money is safe. So you guys want to go to Owanda. you guys want to open up an account. I already have my account set up, but you're going to go to Owanda, start trading, or you're going to make an account, or you can go to Forex.com and make an account here. You can see open up an account. So the thing that you guys need to understand is once you are done testing on a demo account and trying out different strategies, you can then put money into a trading account. I just am showing you guys this so when it does come time to opening up a trading account, you guys know where you need to go. Now, when it comes to trading, I would recommend trading with a couple $1,000s. That's just me. If you don't have that type of money available, cool. I would stick to a demo account because you're not going to be able to see as big of ROIs on like a $200, $300, $400 account as if you had like $2,000, $3,000, $4,000. So the more money that you have in your trading account, the bigger returns and the bigger trades you're going to be able to take. So what you could do if you go to Forex.com, you can try a demo account. And all you are going to do is put in your name. So Colt. I'm going to put a Gmail. Okay, phone number. I am not a robot. Once you do this and click submit, they will actually give you a login details. So we can see right here, these are my login credentials right here. If I go to login to web platform, Colt gmail.com 19. Paste my password. I'm not a robot. Log in. And then boom, now you have a demo account with $100,000 in it. You can go to the chart. Any pair that you want is here and you can practice on here. This is the best thing that you guys can do for the first, I would say 1 to 3 months, just to get your feet wet and understand how trading works instead of just putting up your money trying to get rich. Because guys, focus on the process. This is not a race, it's a marathon. We have time. If you guys are trying to get rich right away, you guys need to understand you're not going to get rich from anything unless you have ample time invested into that industry. So now we are on tradingview.com. I want to go through it and kind of show you guys how to read everything. So I showed you guys our watch list a second ago. On the right side, this is where we'll have all our favorite currency pairs that we can look at any point in time. Now we have all this other stuff on the top and around the chart. First off, this is just our cursor. So if we don't want it to be across like that, we could just click that button right there. There's some tools right here like a trend line that we could put on the chart. We have other tools like the horizontal line that we could put at support, and then we could get it right here at resistance. And if you go to the right side where the star is, it will favorite it and you'll have your favorited tools right at the top instead of having to go to the left each time. So I usually use the horizontal line, horizontal ray, trend line. You guys can mess around with all this stuff. That's why I say the most important thing at this point in time is not to make money, but to get data. Get data on oneself, but also the platforms, how they work, because this is foreign to a lot of you right now. But if you watch this video 2 or 3 times, it'll make more sense. But not just that, once you start showing up day after day, you're going to see more and more things that you didn't previously see. So on this side, I don't really use too much stuff except the fib retracement. Don't use anything here. Right here's our long and short position, and we'll go over that in just a second. Some other tools like an arrow, brush. If I want to draw things on my chart, I could do that. Put an arrow like this. Bunch of cool tools. This one is super important. This little ruler is where we can measure moves. So let's say we go from this resistance to this support. You can see it says 807. This is an 807 pip move. And a pip is basically just one movement up or one movement down in the market. Okay. A lot of this other stuff really doesn't matter. Up here we have the time frames. You can go to another one if you want. Right here is very important. This is where we have our actual time frame. So if I go right here to 1 minute, this is showing me a 1 minute chart. Every single one of these candles represents 1 minute. So we can see a new candle just opened up. We have 53 seconds left on this candle, and then a new candle will open up. Then we have other time frames like the 15 minute. The ones that I mainly focus on are the 1 minute, 5 minute, 15 minute, 30 minute, 1 hour, 4 hour, 1 day. Those are like my top time frames that I'm looking at. So now we're on the minute 15 time frame. Every candle is 15 minutes. So as you're looking at these different time frames, lower time frames like the 15 minute and under, they are shorter time frames, meaning more candles are going to be opening up within a certain period of time. So when you're on lower time frames like that and you're trading off those charts like the 2 minute, we would basically call this scalp trading. So we're trading in a very short period of time. In my trading view, just expired my plan, so I have to renew it. That's why it's like not on the paid one, guys. I promise I have the paid plan on TradingView. So we basically are now on the 3 minute time frame. Every candlestick represents 3 minutes. Then we could go to like the 5 minute. So when you're on these smaller time frames, like I said, that's scalping. If you're on higher time frames like the 1 hour, these moves are bigger moves, but they're gonna have a longer playing out. So when we're on higher time frames trading like the 1 hour, 4 hour, daily, weekly, that would be swing trading. We're waiting for the market to have these big swings and pushes that occur. So now on the hour chart, every candlestick represents 1 hour. So you guys can go through and play with all these tools. In the time frames, you can go through different currency pairs. Like here's USD JPY. This is the US dollar and the Japanese yen. So ideally, if USD JPY is going up, we have to look at the two currencies. So there's the US dollar and the Japanese yen. If any currency is going up, that means that the first currency is doing better than the other one. If the market is going down, that means that the second currency is more powerful or has more strength than the first currency. So if we zoom out like this, we can see that USD JPY is an uptrend. And the way that I look at the markets, if the trend is going up, it's most likely going to go up. There's a term and it says the trend is your friend. So if the market's already going up, it's most likely going to keep going up. If the market's going down, it's most likely going to keep going down. And if you guys want more help on like reading these candlesticks, subscribe to my channel and then go to my page or type in at the search bar Colt Most Def candlesticks. And I have a bunch of candlestick videos. They'll show you exactly what these candles mean. But let me give you guys some sauce real quick. Whenever you see the market forming like these, V patterns like this, it's signaling a buy. You want to buy at the bottom. Whenever you see the market forming these A patterns like this, you want to be selling at the top. So if you see an A, that means a sell. If you see a V, that means it's a buy. And also there's W's like this. It goes down, up, down. You want to buy in here, then ride it up. Or you can look at it as the market goes into like, when it's in an uptrend, it will form these hills and small valleys. Bigger hill, smaller valley. So look, as like this hill, smaller valley. Hill, smaller valley. Hill, smaller valley. Hill, valley, hill, valley. So what we call these is when the market is going up and it breaks a previous high like it did here, this is right here a higher high. Then it goes down to form a higher low. Then it goes up and breaks our previous high right here. It breaks it right here. So this right here is a new higher high. And then what does it do? Usually after it forms a higher high, it goes down to form a higher low like it did right here, and then a new higher high. So that's what we're looking for in an uptrend. Then when it's in a downtrend, we have this previous low right here. Price goes down to form a lower low, then a lower high. Then what happens? It forms a lower low, lower high, lower low, lower high, lower low, lower high. So the way that you guys should be looking at the market is, one, finding what type of trend we are in. We're in a downtrend right here, so we're going to be selling. We're in a downtrend here, uptrend here. Okay, so when we're in a downtrend like this, we want to find when the market is making these lower highs, and that's where we want to sell. Then we want to see price make these higher lows on an uptrend, and that's where we want to buy. Now, I told you guys about my candlestick video a second ago. If you guys go through that video, it will show you reversal candles. And reversal candles are when the market's going up, then it goes down, then right at our higher low, it will form a reversal candle, like a doji is one of them, which is symbolizing a reversal. Then the market will go up. So as you're looking at these lower highs to sell, and higher lows to buy, you look for a reversal candle within those higher lows and lower highs, and you'll get way more confirmation versus just looking at a higher low. So right now, I'm going to actually show you guys something. This candle that I just circled is called a spinning top. Has a long bottom wick. The body of it is really small, and it looks like those toys. Ignore my horrible graphic depiction, guys, but it looks like those little toys that we would play with as kids, and we would spin around on the ground, and eventually they would fall over. So right here, this is a bullish spinning top. And one thing that you guys can do too that is a game changer is when you're looking at price to form these higher lows or lower highs, if you see candles like this one right here with the wicks to the top, wicks to the top, wicks to the top, wicks to the top, it's going to drop. Wicks to the bottom, it's going to go up. So take note of all these little hacks that I'm giving you guys when you are looking at the charts. And recognizing how candles are opening and closing is huge, because every time frame, no matter you're on the daily, 4 hour, 1 hour, 15 minute, they all have candlesticks on it. So once you can figure out how these candles are opening and closing, it's going to give you guys so much confirmation. So now we're on USD JPY. Let's go to a couple other currency pairs. We have USD CAD. So we can see USD CAD, it's kind of forming. Let's remove all the drawings. These higher highs and higher lows. You can see overall we're in an uptrend. We are in an uptrend right here. Okay. Now what I want to kind of see is price. We have this previous high right here, and it went a little bit higher right here. So it looks like price is kind of forming. We have this previous higher low, higher high, higher low. We kind of see candles having wicks to the bottom. We could potentially see price now push up. But what I'd like to see is some type of reversal candle in the next day or two to show me it wants to start pushing up and go up. So USD CAD, potentially we could look for buys. Then we have AUD USD. We actually had on Friday close, we had a doji close. So the market was what? It was going down. We have this nice long wick to the bottom. We have a doji right here. Price could potentially skyrocket to the upside. So over time, I want you guys to understand, as you look at these charts more and more, you're going to be able to read them a lot better. So now I want to go over and just show you guys how to really just enter a trade and how it's going to look on MetaTrader 4. So let's go and let's say that we want to take a buy right here. We think that it's going to be a good buy on AUD USD. So what are we going to do? The first thing that we're going to do is go to the left side and get a position. We have our long position or short position. Long means buy, short means sell. So we're going to click the long position and put it at the current market price right here. Now I have this red box that I can move up and down. That right there is called our stop loss. So we're looking at the markets right now. If we want to buy, we have our previous low right here. The markets went down to this point, and it's starting to push away. So our stop loss, if we're going for a buy, our stop loss is always going to be below our previous low right here. Then our take profit, if we're buying, we can see that price in the past, it hit this point, hit this point. We have this point up here. So we have 3 potential targets. We could potentially drag it right there or right there. Now I want you guys to look at something. This is very important. Right here we have our numbers. So our stop loss is 47 pips. And then our take profit is 147 pips. Now when we're trading, I'm going to help you guys out a lot right now. So we're going to put how to use proper risk. I'm going to make this bigger for us, okay? Number 1, you need to get your account size. For an example, let's say we're trading with $1,000, okay? Then let's say we're trading with 10K. We're big bosses, okay? We got 10K. 2, then you want to figure out how much are you risking on the trade. Usually I risk 1 to 3%. If you're aggressive, maybe 5 to 10%. I don't know. It's really up to you, but this is risking a lot. If you want to just mess around on a demo account and understand and see, okay, if I'm risking 5 to 10%, how it's not safe, you will. But you guys need to understand that you should not be over leveraged in your account. You're going to have more luck at a casino. You guys want to just focus on compounding your money day after day, week after week, month after month, year after year. Like, there's no race here, guys. Like, let's just focus on learning the skill set so we can compound our money, because once we have this skill set, guess what? We have it for the rest of our lives. 3, then we're going to get our stop loss and take profit, and that's going to give us a risk to reward ratio, or R to R. Risk to reward ratio. Okay, so we have this right here if you guys want to take some notes or screenshot that. So we could see that our risk is 47.9 pips. Our profit, take profit, is 147 pips. So right here in the middle, look how it says 3.08. Our take profit is a little over 3 times the size of our stop loss. And that's what we want to see. Usually when I'm trading, I want to see it say 2 like this. And that's telling me that my take profit is 2 times the size of my stop loss. That's a 2-to-1 risk reward ratio. That's what we usually want to have, because let's say that we take a buy on, I'm going to write this out for you guys. I'm going to give you guys this sauce right now. This stuff is so important, okay? So let's say we take three trades taken. I'll make this bigger. First trade is AUD USD, which we're on. 2 USD JPY, 3 USD CAD. $50 pip stop loss, and then our TP is 150 pips. And we're just going to copy and paste this for all of the other ones, because most of the time it's really depending upon our stop loss, but most of the time, or our stop loss will be the same for most trades, around that range. And it's not really about how many pips our stop loss is, because our lot size is going to change. So realistically, we just want to figure out how much are we risking of our account. Okay, so let's say we take 3 trades, buy AUD USD, buy USD JPY, buy USD CAD. Both these trades right here, USD JPY and AUD USD, stop loss hit. We're down 100 pips. But then USD CAD goes and hits our TP for 150 pips. We are now positive 50 pips in profit. So you guys can take a loss on 2 trades, but if your risk to reward ratio is good and you're risking the same percentage pretty much every single trade, you're fine. Because imagine if you take a trade and you lose 10%, then the next trade you're all scared and you go in and you win, but you only win 1%. So that's why you guys don't want to be all over the place risking 10% here, then 1%, then 2%, then 10%. Like, you guys want to be really, really smart about this. So ideally, let's say that I'm going in this trade right here. I want that 1 to 3 or that 3 to 1. So here's another example. Trade example. Let's say we have $10,000 in our account. We would be using, let's say, a 10-cent lot size. So our risk for this trade, if we use a 10-cent lots, we'd be risking $47. To be exact, it'd be $47.90. Reward, excuse the fire alarms, fire trucks, $145. 145.50 to be exact. So right here, this trade, if we're to have taken it, and this is what we would do if we're going into this trade right here. This is how it would look on MetaTrader 4. We go to our quotes page, USD JPY, we would click that, or this is AUD USD, we go right here, click this, go to trade. Our lot size will be in the middle. We can adjust this, so 0.10. Okay, then our stop loss, our stop loss, it says it right here, so 0.64737. Take profit would be right here, and it'd be at 66671, and then all we would click is buy. So we can now see on my chart that we are in this trade. And obviously, if we hold it down and go to chart, we can see our trade. We can see where we bought. We can see our stop loss right here, down here. We could see our take profit up here. So we are now in this trade right here. And a major hack, let's say that we have Owanda as our broker. when you guys go right here to your watch list and you add it, when you go to Forex, let's say you're adding Euro USD, make sure you're adding the one with your broker. Okay, it says Euro USD Owanda, GBP USD Owanda. So you want to make sure you're adding the same one, because the price on the chart, if you're with a different broker, like let's say you're with Owanda, but you look at for FXCMs, the prices could be off. So when you enter your take profit and stop loss, it could go and hit it on TradingView, but on MetaTrader 4 it won't. So this is how you guys can start trading Forex. This was like a really beginner introduction video, but I think that there's a lot of value in here. You guys should probably go watch this a couple of times. And if you guys want one-on-one help, you want to learn from me how to trade, guys, reach out to me on Instagram or click the link in my description and book a phone call, and let's see how I can help you out. I will see you guys in the next video. Make sure you also subscribe to my channel if you haven't. I have so many videos on trading that will help so many of you out. Talk soon.